Okay. So let's kind of get into it, right? So what I'm talking about when I talk about chipping and swinging is essentially trade management. And this is, you know, this is really key. And I've seen a few people on a day-on-day basis, on a week-on-week basis, really suffer from not being cognizant of, is there a strategy to chip or is there a strategy to swing, or when to chip and when to swing, right? And okay, you're probably sick of me talking about these golfing terms. I don't even play golf, by the way. So, but what I'm talking about here is chippers, you know, a chipping P&L would look something like this.
Tim, are you sharing a screen?
Oh, I am. Yeah. I am sharing a whiteboard. Can everyone see the whiteboard? Well, not Rob. Can anyone else see the whiteboard?
Yeah.
Yeah, I can see it.
Okay, something to do with my connection then. Carry on.
Okay, let me pause the share and resume the share. That might help. There should be a whiteboard somewhere on your screens, Rob. So days 1, 2, 3, let's say 4, 5, you know, chipping P&L will look like this.
From London Lane, when our city short term size €100 million will be enough states that massive support for the European economy.
So actually, I'm not going to do this in green, or I'll just do it all black. It'll look like this. Plus 150 minus 350 plus 200 plus 500 plus 500. Then it will go on minus 150 plus 600 plus 200 minus 350 minus 150. Now this is chipping, right? And essentially, I've seen traders do this. And I've seen this with poker players as well, professional poker players. A friend of mine, he's a barrister, and to supplement his income while he's waiting for tons of invoices to be paid, and I'm sure Rob could expand on this for us, but he plays professional poker, and that is his cash flow, essentially, for himself. And he just chips away. He just goes into poker games and he'll just chip away. He won't go for big wins, like big multiple thousands of euros wins. He'll just go in every, like 4 nights a week, and he'll just chip away. And that's how he just pays for himself day to day while he's waiting for loads of invoices to be paid. And he's chipping, he's grinding. This is grinding, right? And you get a nice little bit of green on the screen. You know, maybe one of these days it goes plus 1,000, plus 600, plus 300, minus 300, minus 6, minus 150. You know, what I'm talking about is you're really knowing when you're not on your game and you're stopping. Your daily loss limit is actually like an emergency. You just crashed the plane, but it's okay. You're going to fly tomorrow. But really, the signal for you to stop doesn't have to have a huge P&L figure attached to it. You know, and that's chipping. And you're controlling consistent sizing. But I've worked with traders who just come in and do something like, on average, they would have a floating average center point of like $400 or $500 a day. They're making really good money. $500 a day. I mean, shit, that's a lot of money. It's 10 grand a month. I mean, I don't know how many of your friends make 10 grand a month. Then you've got swinging. Swinging. Variable sizing. Now, I'm a bit of a swinger, and I can be a bit of a chipper, but Will DeLucy is a bit of a swinger too, and not so much a chipper. Now, what happens on things like with swingers is this. Oh, minus like. Okay. So with swinging, you're taking on a lot more risk, but you're variable sizing. But again, you're knowing when to stop before hitting your daily loss limits. Sometimes you'll get into an actual swing trade, and it just pulls back in your face. I have one of these in that gas actually. A couple of days ago, I was on the shorts, and then I went to the longs, and then I tried to hold the swing on the long, and it just didn't come back for me until the next morning. So fine, jumped on the longs the next day from a good base, took back my money. But again, notice the commonalities across these two styles. I'm knowing the signals when it's not swinging my way. There's a great equities trader called Sang Lucci, and he trades a lot of options, and he can put up serious P&L, 145 grand days. He'll stop trading if he's down $750. He'll just be like, no, fuck it. This isn't where I'm not seeing it today. And you need to know when you want to be one or the other. And the recommendation I would have is to chip and chip and chip, and then say, I love this trade, I want to marry it, I'm going for this. And you just get sized up aggressively, you hit into the trade, and you're a big boy about your stop. I mean, you guys should be using no more than 10 tick stops, to be honest, on big size here. Okay, that's done. Yeah. And you can, this is how you make a living. Make a living is chipping, and this is how you can make yourself poor very quickly. If you are always swinging, you need to have the account to do that. But you also need to be cognizant of what you're doing day on day. You're putting up those big days that kind of negate all the other, daily loss limits, for example. And you're knowing when to walk, when you're kind of just, okay, I'm doing all right, I don't want to push it any further. But for us to graduate to swinging, we need to chip. So I'd like to open this up to what people have experienced or think about this themselves and get a conversation going. I know I don't think Rishi would mind me saying that his results were mixed, and in a situation of needing help when we started working together, and we completely changed his sizing to a chipping size, but he was able to take swings with chipping size. I don't know, Rishi, if you want to talk about that experience at all.
Yeah, that's right. I think I was always trying to just swing constantly because I was getting good trades, but then because I was constantly trying to go for the swing, my losses were too big, and then my account just couldn't handle it. And it plays with your psychology though as well if you constantly go for swings, because you say you are in a good trade, you won't book profit because you think I want that bigger amount. So it can go against you as well. So you need to be chipping as well. Like you can't just do one, or it's very difficult to do the one. And so just by swinging constantly, I've blown many accounts doing that. So switching to chipping, then occasionally having the swings, it's just changed everything now. But it's the psychology of knowing when to do a swing.
Yeah.
Because if you have loads of chips, sometimes I found that I started to get greedy, and then I was going back to that swing way again because I just wanted more.
Yeah.
So yeah, that's me.
I think with the big thing with you was the sizing. You were getting in every trade. You were really big, like you were, and that means that you're 2 out of 3 losers on a 30% win rate, for example, were hurting you really badly, and the wins that you got, you were banking them too early, so therefore you were getting one-to-one, you were banking one-to-ones on your winners, but then you were taking like more than your one unit of risk on your losers. You were kind of letting them run a bit too much against you, and it was full size. Whereas if you come back to the basic identification that you were able to identify some awesome trades, so it's just like, all right, well let's just chip on that basis, and then when you get your confidence back and get your P&L back the right side of the positive negative, and then just create the foundation again. And you don't need to do that with big size. So I think sometimes, like, I'll just be chipping around in the market. I'll just be chipping around, and things will, I mean, a lot of the trades I am just chipping around, but then I get into swinging some stuff. And when I say swinging, I'm not talking about here. Maybe I should come up with a different name, like batting, chipping versus batting, because swinging denotes that we're taking a multi-day like swing, enter here, exit here. I'm not really talking about that. I'm talking about sizing. Okay, like on a chipping basis, we could be short, flat, short, stopped out, short, flat. That's chipping. Short, takes them off, runner gets filled, we're flat. You've heard me talk about flipping with a market. Here's what a swinger will do. A swinger will be like, right, I've been chipping my way down on the shorts. Now we've got a rounded bottom. I'm long here, stopped out. Long again, full size, clip out. Add in, clip out, clip out, clip out. So these trades coming down here, I'll be like 2, 10, 2 to 10 lots. Just skating in, maybe skating out, scalping around. These might be 20, 30, 40 tick moves. When it comes down here and I'm starting to get turned around on keeping the sell, trying to sell it, I identify, right, I need to switch to the long side here because now we got like a really good support area. Long 50. Add it, scale out half or 70% of the clip on initial inflection. Back in, long 100. Scale out, scale out. I might just scale out all in here and leave like sort of stuff running here, maybe multi-day, depending on the quality of this area. But the difference here is not that I'm taking a swing trade as in a swing in the market. It's that I am changing my mindset from tight risk, tight risk, tight risk, tight risk on the way down, to then this trade is going to move with momentum. I am getting in, I'm committing, and I want that burst of energy, and then I just scale out, scale out, scale out. You know, a veteran and an ex-head of trading of mine drilled into me. He's like, look, you know, Amplify have taught you, yeah, you know, long here, scale in again, and get out up here. He's like, fuck that. What we're doing is, Tim, he's like, what we're doing is, there's a move in the market. There's a move in the market, and it's like this. He's like, I don't give a shit if you pick this bottom and you pick that high. He's like, I don't give a shit. I just want you to take something in the middle. That's all I care about. Just take a chunk out of the market. Just take this area and do it with 1,000 clips. And I'll be like, okay. And so then we get into these trades, momentum. And then when momentum was really kicking in, I'd just bang, I'd hit into something just when a rotation was trying to, like, you'd have a counter rotation. I would literally be putting in the bottom of a rotation and I'd just be like, bang, like 1,000 clips in the bund. I'd be like 200 clips in oil, something like that. And I would just put in the bottom of a rotation with some stochastic divergence and I would just push the market up. And then you chase it at market, another 100, trying to put it in. If anyone came against you, you just back it up with another 200. Now that's real swinging because you're these figures add another zero to them, all of them, when you're on that size. And the point is that I know we all want to be doing swing trades, but you need serious P&L to do big size like that. We all forget that you can make a really good living by chipping. You know, any other input on this? Like Rob, for example. I mean, I think you have a really good approach to chipping, and you're holding some really lovely trades.
Well, I don't know what to say about that. I mean, at the moment, I've had to change what I do in terms of scaling out and holding because of the volatility. I went for a long time setting an initial target of about 2 to 1, and then a further target at some sort of technical level, which was probably about 3 to 1 or 4 to 1 sometimes. And that was working very well. But it really hasn't been. Since the volatility started in February, I've had to figure out a different way of doing it because that's been failing, basically. So what I'm doing at the moment is using a wider stop, a smaller position size, and I'm actually taking half the position off at 1 to 1 and then trailing a stop. That's working, actually.
This is in equities.
Yeah, I mean, quite frankly, I don't think anything's been working in oil. It's just been pretty crazy. Well, I mean, that's a silly thing to say. I haven't worked out a way of doing it consistently in oil, but certainly that's been working with equities, yeah, and the euro actually. But I mean, the two markets that I just found pretty much impossible for, 6 weeks now are gold and oil. I just can't find a way of chipping them that's consistently profitable.
Yeah. With Richard and Lucian, I had them size up double yesterday just to expose them to sizing up. And I think that was a very good kind of lesson in probably watching the P&L and watching the risk, because you can kind of get into a rhythm of like, okay, I'm doing one lot trades on big moves, or I'm doing 2 lot trades on medium moves or big moves, or I'm doing 3 lots on kind of medium moves, and I wanted these guys to get a bit more exposure to the 4 lots, and what that P&L looks like on 10 ticks. Obviously, you're going from a 300 to a 400 loss per trade, but then you really start to think, well, how can I tighten up this risk here? And maybe I want to keep it at 300 risk, even though I'm 4 clips or 6 clips, because essentially you got to remember you have to have consistency in your MAE to MFE ratio. This is your max adverse excursion to max favorable excursion ratio. This graph needs to be a hockey stick with, small drawbacks. And how do you change sizing within that? Well, your risk needs to grow as per your clip size, but it doesn't need to grow exponentially. Like, 10 lots means you've 1,000 risk on the one trade. Well, that's ridiculous. I've hit into 10 and 20 lot trades with 4 ticks risk. When you start to feel an area and feel rhythm, you can do that. And if you take the loss, fine. Is it a mandatory re-entry? Maybe. But something that to be aware of is you can move from banking your 2-to-1s. I wanted to teach you all to do 2-to-1s, 3-to-1s. Then you're making money consistently. On your at worst, you're going to be flat. with win ratios of 30%, 33%. Right, this is this is 33%. It's covered to here. You got guys like Paul Tudor Jones. He only takes trades that are 5-1. You have other people who will only take 8-1s. So you got to think, well, Jesus, you know, what am I doing here? I'm banking these things at 2-1, 3-1. Maybe I'm getting 4-1. Well, how do I get bigger as a trader? And I'm chipping. Well, a swinger will be like, you know, they're always aiming to get like 6-10-1. But the truth, let me tell you, the truth is when you size up into a trade and you're suddenly like serious P&L on side, you're like, Jesus, I'm just taking whatever I can get here. I don't even know what the ratio is here. So, but to keep the maths on your side, this is the safe zone. So now as we graduate out of the safe zone, we need to be doing 4-1 with a 33% win rate. You know, 5-1s. You know, and I need you to maybe look at your trades before you get into them and project, okay, you know, I'm buying the bottom of weekly value. Well, I do ultimately want to hold this to the other side of value. You know, we've got a zone, I'm buying here, and I really want to sell up there. Can I hold this overnight? Do I have enough margin to do that and the amount of contracts I have? Maybe, yes, that's a variable. So I would like to see people striking a balance between, you know, because you would have, say, 4 clips, then you can stay safe. You can stay safe and have runners. Minus 2 here. These runners can go on to 4, 5, 6, 8-1s. But you should probably then, once you're scaling up into 4 to 6 clips, you should probably adjust your stop so that you don't have 2 or 3 clips coming back in your face. Now that goes against what I've taught some of you, but I want you to bank money when it's on the table. That's more important than you exploring how far trades can go, I think. You know, is Chris on the call here?
Yeah, I am. Yeah, could you just explain that? What you meant by the last bit? As
yeah,
in an
let's do an example here.
Full clip thing.
Yeah. So we're a total legend. We bought the bottom. 4 clips. So let's say this is 2-1, 3-1, 4-1, 5-1, 6-1, 10. Okay, so yeah, we're a total absolute legend, buying the bottom of the market. It comes up. We're long 4 clips, so we're +4 here. Okay, we take off. Well, traditionally, you guys have been taken off here and here. And there has been money left on the table. But what I want you to do now with 4 clips is be like this. Be like, you can go -1 here, -1 here, and then -1, -1. See your aggregate probably like probably like a 3.75 to a 4-to-1 overall on this trade. Or you can do -2, -1, nothing, say -1, and -1. So now your aggregate probably a 4.5 to 5-to-1 on the whole trade. A swinger
Tim,
will be do, yeah.
you cannot do on the pink one. You cannot do because you got 5 clips.
2, 3, 4. Oh yeah, sorry, you can't do that last one. Sorry. Sorry, that's aggregate probably again a 3, probably more towards a 4-to-1 than a 3.75. Or you can do this. You can do -1, -1, and then -1, 1, and then probably -1 again here. And again, you're probably going to be more solidly towards a 5-to-1 here. But it's more, you know, do you want to scale out early? Or you could also be a big boy. I don't mean to be bullying anyone into doing this sort of stuff, but you get a long 4 and then you go -1, -1, -2. So now you're what, 4, 6, 10. So that's more like a 6-to-1. So it's contextual though. I realize I'm trying to define something that's very contextual. What is the market doing? Where are we likely to go? But if this is, for example, a really good value area low, or like a, you know, higher value area low or high, value area low would only be, you know, or a break, or actually a high breakout. You know, you really need to let that trade breathe. Like, I mean, in nat gas, I was holding something for the whole goddamn day yesterday. I mean, it just kept on giving. It just kept on going down through, make new all-time lows before finding support on an 88.6 extension. You know, and I was actually inclined to hold most of my clip all the way into the close. And at the end of it, I only held a small amount of the clip all the way into the close, and it just sat there. And then I got bumped out overnight. But I want people to kind of let the trades, well, I want you to bank some money on the initial moves, but maybe make your initial banking period the 3-to-1s. Now, Rishi has a lot of balls, because he holds some big swings in the market, some big moves, and he uses 2 40-minute bar charts. You know, so he's not looking at rhythm, he's not looking at all this other small stuff that makes us all very twitchy. I mean, Chris, you've had some really nice moves too.
Yeah, I guess I haven't developed a real strict framework on what I do, but I've I'm probably trading on quite a lot of 2 lots at the moment. What that's done, because I've got less risk to take advantage of, it's made me maybe better at holding stuff. So I've held a couple of 2 lots that have been like 6-1 and 9-1. And I don't know. It's just I don't know what the right decision is. I think the key bit for me is like knowing when to scratch trade and knowing when to let it run as well. And for me, I don't mind getting stopped out sometimes because I've got to give it some breathing room. But yeah, I totally agree with the chipping, and I'd like to be hitting every trade, but I guess this month I've been just like chipping quite a lot. Just when I've got good P&L on the table, I'm taking it off, and
I think if there's one
opportunities.
I think if there's one takeaway from this, though, it's that I don't recommend people to swing at every trade at all.
Yeah.
I mean, I really don't. I think you should, your status quo should be, I'm chipping, right? And it's only, like when you see some trades, like when I say wait for a clean looking trade where the 240-minute bar comes down to a level and then it just wicks a little bit, what's Rishi going to do? He's going to buy that sucker and he's going to sit on it, because it's a setup. He loves it. That's what he waits for. For what we do, we look for a clean rhythm back to the, we've accepted into an area. We do a little rhythmic pullback. It starts to wick a little bit. Bang. I'm long max size because it's clean. It looks like it's the bottom of the rotation. There's a small candle there, a small selling candle on the end. It's the fifth candle. It's a small selling candle. It looks like buyers are going to start to have an opportunity to come in here. I'm long. I'm swinging it. I'm hitting this hard with max size, and then wait for it to release in my favor. But if you're punting into a trade and it's like, well, is the rhythm clean here? Where's VWAP? Oh, VWAP is like 20 ticks below the support level. The pattern shift could still play out. Fuck that, man. I'm gonna be like 4 clips for me. I'll be like, I'm just putting a feeler in here, and if I get stopped out, well, my stop might be above VWAP. If it comes back down to VWAP and the conditions are right, I'll hit VWAP hard and see if it takes off from there. But I'm not going to be, if things don't line up like a supermodel for me, I'm not going to be swinging at them. And I think that's the difference between chipping and swinging, knowing when to take the bat out of the shed. And
yesterday when we were playing with it's Richard, playing with the 4 contracts. Yeah. It was interesting, just the psychology again. So, you take someone for 2 and then maybe 4, and then you're waiting for, getting 6 or 8 on the last couple of clips. And the thing that was going through my mind is, there's a lot of upside here that's not locked in. And, at what stage do you think about moving your stop? And, when do you start to bank what's there? And obviously part of it's just the rhythm, what's going on in the market. But what's your view on moving the stop as opposed to just trading what's on the screen?
Well, personally speaking, I don't move my stop. So this would be a normal scenario for me. Let me draw this out. Let's say we got a level. Right. And the market's flat line. And then it comes back to here. Bang, I'm in. Move, yeah, so I've got to stop. At this point, I'm now stop, set risk, P&L set risk there. Bang, long here. And the market starts to like this. If I'm swinging at this trade, I'm gonna take something off here. As soon as that momentum, see the momentum is now just taking a pause. I'll take something off there because I'm a bit of a momentum trader. I like timing momentum. Like sometimes I'll be sitting here, nothing is happening, and then I'll just be watching the ladder, watching the time of sales, and then I'll just get in, and then bang, the market will move because I'm reading an energy in the market and reading the tape. And when that energy steps off, I want to step off too. But now now I have runners. And with nat gas is probably the best one for this because it'll fart around for doing nothing for like an hour, and then it'll be like 30 ticks up in seconds, and then it will like sit around for an hour, and then there'll be another 30 ticks up. So when it's doing that, when it makes these steps up, I'll take something off. When it makes another step up, I'll take something off. My stop is still right down there. Yesterday, unfortunately, I took off at the second takeoff here, at the second scale out. It did not make another move up, and it came back to, well, actually, what happened? Ish. Oh, yeah. It did this. And I actually took it off, and sure enough, the market did a bit of this. I actually, first off, I tried to rebuy it before I flattened out, and then I got stopped. And that's when I got short. And the market, I was talking to Alex when this happened, and then as you know, the market did this. And what I did was I scaled out on the short side. I knew now this failure on the tops had a lot more legs to run, and it was breaking down below previous day's value area low. So I was not scaling out on the first rotations. I scaled out in the second rotations. It went flat for a bit. I flattened out, and then I got short again and held it down into the rest of the day. But I don't give a shit that I flattened out here and then I'm reselling it. I don't care. I know the trade's going down. If it flattened out, I'll just get back in. Scale out here, scaled out into the end of the day, and then I ended up flattening out after the overnight session on automatic trigger trail. Or it might have even been better than flat scratch. But when I'm hitting something, I'm scaling out pretty quickly because I'm sized up into it. So I don't need to be a hero and hold really big size for a huge move. Yeah. Whereas if I'm chipping, I would probably, if VWAP was down here, I'd probably be like, 4 to 10 clips here, and then kind of just, I'd forget about it. Like I'd just forget about it and have some take profits in the market here. Maybe look at another market or go to do something different. Does anyone have any input on this? Any other input?
Only to say, I get the theory, but it's incredibly difficult to do in practice a lot of the time. And just to give you an example, I can't remember which day it was. It was very recent. I was trying to go short on oil, and oil did indeed go down. But my problem was this: the rotations were absolutely incredible. It would go down 70 ticks and then rotate back up 60 ticks.
Yeah.
And
what was the
I didn't know it was doing that until it had done it about the third or fourth time.
What was the VWAP condition?
I can't remember, Tim. I really can't. But the point I'm trying to make is it's I mean, it was just impossible to well, A, get a good entry, and B, having got a sort of less than good entry, to manage a trade in conditions like that, despite the fact that every time I sort of took a step back and looked at it, I thought, this is going down.
Yeah. So I think context and situational awareness is important here, because seeing this little micro chart I've drawn here on the right, you could be thinking, oh, that's got longness pullback, not aware that this is the rhythm.
Yeah.
So you're getting long here, and this thing is just determined to do this. You know, and that's why sometimes using minute bars and 240-minute bars can actually show you what's going on here, lower highs, rather than this, you know, this step process. You know, cool. I mean, Sana, what's your input on this? Sana's been pretty awesome at taking structural targets and not kind of looking at, oh, well, this is VWAP level, this is that. She's just like, I'm long the low and I'm selling the high of an area. Any input, Sana, on your experience?
Yeah, I've been trading the CVAs more than well, I do look at VWAP and how well the rhythm and all of that, but for me, the levels of a CVA, or if I really like a level, it just overrules everything else. But
in terms of your trade
but sometimes it works, sometimes it doesn't, to be honest. Of course, it helps you when you're like taking these like big trades. You're holding a clip or something for a long period, and it pays off. But then the bad side of it is that sometimes you don't know when it's time to actually get out, because you're just holding, thinking it's gonna go back up, or is, well, depending on your position or whatever, but then it actually doesn't, and you miss out on 40, 50 tick, and you're just watching it coming back in your face, and then you just, you know. So I think it's good if you develop that sort of knowing when to get out, not just keep looking at it and then you get emotional and then it's wishful thinking. You're not really thinking properly anymore. So it's good when you're experienced, I guess, and you know when to actually get out and not wait for.
That's a very, you know, you've hit on something that really is the crux here of, do I, you know, I've got a lot of open P&L. Am I going to let this roll around on me, or am I just going to take this? And, you know, you've heard me a couple of times live where I'm like, I could just bank this and go and have a happy life for the rest of the day, or do I want to let this run? And, you know, on reflection, every opportunity I should get to have a happy life and bank good money, I should take it.
Yeah, you're right. Yep.
And be the happiest man in town. You know. So here's what you do with that, right? P&L retracement limits. We have a daily loss limit of minus $1,000, okay? But we should also have a daily profit limit Now, I don't like capping earnings because that's why half the reason why we do this business, because there is no ceiling. But what I use is a DPL, which is a plus 1,000, and this is like a trigger, and you can actually set this up in your Sierra charts. But a DPL, so when I get to 1,000, I am not going to let this, is the retracements. The retracements. Well, I'm out of the market at 1,000 down. Well, I'm not, but you will be. So DPLs plus 1,000. If this retraces 250, you're out. Walk. But if I go to plus 1,500 and it retraces to 250, walk. If I get to plus 2,000 and it retraces 500, I walk. If it goes to say plus 3,000, I should say to myself, is this my hard stop walk figure for the day? Well, you should be saying, fuck yeah, I'm just going to walk on a profit of 3K. You know, I've had experiences where I could be so close to my daily loss limit, and I just put on that one trade and it comes back, and I actually hate those days because I'm just getting out of jail for free, and it's such a bad habit.
Yeah, you're not learning, are you? That hard.
Well, you're learning how to shit bullets for like the whole day. You're learning how to wear a lot of stress on your face, and it's just not good. You know, you should. You know, this is how. So this DLL is how we maintain consistency, and really, you should be walking on a minus 750. If you're not feeling it on the first couple of trades, like for me today, I just started too early, thinking I could see a weakness in the euro, and I scaled into a trade. It didn't work out. The dollar wasn't in the mood for going any higher today in the morning. So fine, fuck it. I'm actually just walking right now. I'm not going to trade for the rest of the day. Maybe I'll come in. Maybe I'll have a look at the open. Well, who knows? There's a decent bid in oil. Personally, I think it's bullshit and it needs to be sold down. But however, the point is that when you're up these amounts, you need to say, if I lose more than this, or if I roll back a certain amount, I'm walking. It's really hard to live with ourselves when we're up 2,000 on the day and then we finish the day flat. You know, like, you've worked so hard to put up 2,000. Congratulate yourself, flatten out, and go and have an ice cream.
Yeah, and these things actually would ruin your whole week. Because it stays on your mind, it doesn't go.
Yeah. You should go and have my current favorite cocktail. It's called a Quarantini. Go and have one of them. You know, you should just do anything but be at the computer. Anything. And, you know, I mean, I've talked with one or two of you who have experienced this, and it's just, I feel for you, you know, because it's so hard to deal with. You know, when you see that figure on your screen, just say, wow. You just wake, it's like you're in a dream and you need to wake yourself up, you know. And I just can't stress that enough, you know. And I know you guys are putting up some of these P&Ls, you know, and I need you to just say, hey, enough is enough, I'm done. I went through a really bad week-long period in a firm, and I remember I was getting really fucking gun shy, and I've just taken a trade, and then I was up 500 one day, and this is about the 6th day, and I just couldn't make money. And I got 500 quid in the screen, and I thought, okay, I'm just gonna do one more trade, and I lost it, and it was P&L 0. And as I was leaving, I just bumped into the head of trading. He's like, how'd you do today? I said I was up 500, and then I flattened out. I came back to 0, and he's like, you just got to put up those green days when you're down. He's like, if it was $50, that's a country mile better than 0 for where you are in your mind right now. So why would you, if $50 can mean something in this game, well, respect what plus 1,500 or plus 2 or 3,000 means, or even plus 1,000. You got to think like a DLL is a loss unit, is a risk unit, a day's risk of unit. If you're up a whole day's risk unit, well, you got to think about that. At this point, you're up 2x that, 3x that. Are you going to leave that roll around on the screen? No. So when you're in a trade and it starts to roll back down your face, you should think about these. You should think about these retracement limits. Rishi, I know, and Alex as well, actually, in the Euro, he was up like, well, both of us were in a very similar trade. I was up like 1,500 quid, as was he. Maybe, actually, yeah, it was about 1,500. And I was like, right, I'm out of this trade, Alex. And he's like, oh no, I'm going to scale back into it. And then it came all the way back to the entry point, and he flattened out. And I was like, that is really tough. That's really tough. So use these retracement limits.
Yeah.
All right. So I think this has been a really good chat. I've enjoyed the session. I think this will provide some use to some or all of you in the future. And yeah, it's a good chat. If anyone has anything to add to this or any concepts to add, speak now, forever hold your peace.
That's good. Yeah, sometimes I struggle where I'm, in good profit. I've taken some off the table, and then I'm still holding one, but I've got really good numbers on the screen, and it's how deep's the retracement, how that affects my psychology in that acute period. It changes everything compared to when I took the trade at the start, and having a little bit of a framework for what when to take it off rather than like holding out. Because sometimes I've done it and it's worked really well, where I've literally to stop myself getting out of that third clip, I've gone and done something else away from the screen, which is perhaps not great practice, but because I'm so inclined to
if you've got one clip left on as a runner, then I think you should move your stop up and just say, all right, I'm not letting this one clip roll all the way back to entry. One clip, fine, move your stop up. And that's where you're so if you're in a really good position where if you have a trigger trail stop that's chasing, then you don't even have to worry about that. If you got a 40 tick trigger trail and your trade is now paying out 6 to 1, fine. Let the trigger trail stop do its thing. So cool. All right, good chat, guys and girls. Good luck today. I think I'm not wholly buying into this bid, Tom, but we'll see.
Okay, cheers.
Cheers.
Guys.
Thanks,
later.
guys.
Thank
Bye,
you.
everyone.